Right. Okay, we have two types of tax, direct tax and indirect tax. So direct tax is called direct because it is imposed directly to the individual or company. Okay, so most direct tax is paid to the Inland Revenue Board and HDN, or sometimes it is imposed by the local council. Okay, example of direct tax are income tax, petroleum income tax, RPGT, stamp duty, and property tax and assessment tax are paid to local council. Okay, cukai pintu and cukai tanah. Indirect tax is called indirect tax because it is not paid directly to the government but paid through a third party and normally being added to the price of products or services. Okay, so most of indirect taxes are under the government of where can we find the PowerPoint? I will put in Google Drive later on after the class. Or do you need it now?
Now would be great. Then I can take some notes directly on the PowerPoint presentation. If it's possible, it would be great. Thanks.
All right. I'll do that now. Let me stop share first. Okay. I paste the link to the Google Drive in the chat section, so you can click there. In there are I have put a few resources related to SST in there. The lecture slide is this one. And then you have the general guide on sales tax and service tax. This one I took from the website of the what we call it, my SST portal. Okay, but just to warn you that this is not so updated. The sales tax is as at January 2019. The service tax is as at August 2018, but that is the latest that they have put in the website. Okay, so there are a few changes, some changes because changes for sales tax and service tax happen very frequently. So I guess they also cannot keep themselves updated with the general guide. Okay, most of the basic things are still there, but a few changes have not been incorporated in there. And also the other two are from the textbook, the scanned textbook. Okay, so textbook is as at 1st February 2019. Okay, also not so updated, but a bit more updated compared to general guide. Okay, so you can refer to this as well as to the slides that I'm going to put, and also I will show you the my SST portal. So all the they put all the updates in there. Okay, there are so many updates. But the important ones will be incorporated in the slides already. Okay. Okay, come back to the slides. Okay, where we? All right. So indirect tax is called indirect because it is paid through a third party, normally being added to the price of products or services and under control by the Royal Malaysian Customs Department. Okay, RMCD. Examples of indirect taxes are consumption, SST, sales tax and services tax, excise duty, and import duty. All right, so we are going to focus on consumption tax. Okay, consumption tax, we call consumption tax because um, tax is imposed when you consume. Okay, when you compare in the income tax and consumption tax. Okay, income tax is tax on income, regardless of whether you consume the money or you put the money in saving, it will be taxed. Okay, consumption tax is tax on consumption. If you consume, you will be taxed. If you don't consume, you will not be taxed. Okay, and usually consumption tax is on territorial basis. That means Malaysia will only charge consumption tax on goods and services consumed in Malaysia. Okay, for that reason, any export, sorry, any export service or exported goods will not be subjected to sales tax and services tax. Okay, so in Malaysia, um, previously we had sales tax in 1972, and then in 1975 service tax was introduced. Okay, and we had these two types of tax, sales tax and service tax, for so many years until in 2015. Okay, these two taxes were repealed and replaced with GST, goods and services tax, starting 1st April 2015. Okay, and as I think all of you are aware about when the new government came in after the previous general election in 2018, the GST was repealed, okay, and replaced with sales and service tax again. Okay, so but before it was repealed to ease the process, starting from 1st June 2018, they still had GST, but it was taxed at 0% at that time, so no GST was paid, although GST was still basically being in place at that time, okay, but 0%, so we don't have to pay anything until 1st September 2018, after they have arranged everything. GST was repealed and then replaced again with sales tax and service tax. Okay, we usually refer this as SST 2.0. The previous one in 1972 and 1975 sales tax and service tax were called SST 1.0. Okay, so this SST 2.0, although it's still sales tax and service tax, but different from what we had before. A few things, a few new rules that have been applied for GST were also being applied for SST. Okay, so we call it SST 2.0 now. Okay, basically GST is one. They have GST Act. Okay, GST Act 2015. So GST is considered as one type of tax. Okay, but for SST, although it is usually called as SST, but it's actually under two separate acts. So sales tax is one thing and service tax is another thing. So basically, this is two types of tax. One is sales tax, one is service tax. Okay, although we usually call it as SST as one. Sounds like one, but they're actually two different types of tax. All right. Okay, let's see a bit of differences between GST and SST. So GST, in some countries, it is called VAT, value added tax. Okay, in other countries, during Malaysia, it was called GST, goods and services tax, but the concepts are similar. Okay, so GST, basically this is how GST works. Okay, uh, it is imposed in all levels of supply chain. Okay, from manufacturer will impose GST to the buyer, which is the wholesaler. So whatever paid by manufacturer during purchase of raw materials for GST will be claimed back here. Okay, so manufacturer will impose tax to wholesaler, and at the same time, the manufacturer will claim back whatever GST that has been paid when they purchase the raw materials, when they pay for electricity, when they paid for rental. Okay, all those have GST. So whatever GST that they have incurred, they can claim back, and then they will impose tax to the wholesaler. Okay, so between what they have to pay and what they can claim back, the amount will be set off. Okay, and then any difference, either they have to pay more or they can get refund from customs. Okay, and then from wholesaler will sell to retailer. So same process again, wholesaler will impose GST to retailer. So wholesaler will collect money from retailer. At the same time, wholesaler can claim back whatever GST that they have paid when they purchase from manufacturer. Okay, and then the amount will be set off, and then they pay the difference or they claim that refund for the difference. Then retailer will sell to consumer. Okay, so retailer will charge, we collect GST from consumer, and then retailer can claim back whatever GST that they have paid when they purchase from wholesaler. Okay, so in the end, it's the consumer who has to pay the 6% GST. For the manufacturer and wholesaler and retailer, although when they make purchase, they have to claim GST, but whatever GST that they incurred, they can claim back. Okay, so that's GST. It is imposed on all levels of supply chain. Okay, so in Malaysia, the GST rate is 6%, which is considered one of the lowest. Okay, some countries like Indonesia, I think they have 10%. Australia also, I think up to 10%. We have basically 0% and 6%. Okay, 0% is for all the basic items like rice, sugar, raw chicken, fish, raw fish. Those are all at 0%. Okay. All right. Okay, so this is another what you call illustration on how GST is imposed. Okay, so example here, like you purchase, okay, for the wholesaler purchase for 100 ringgit. So when GST is imposed at 6%, then the price that they need to pay is 106. Okay, and then after that, when wholesalers sell to retailer, okay, for example, they purchase at 106, of which 100 ringgit is the purchase cost, 6 ringgit is the GST. Say after they take into account all their costs, so they sell at 125. Okay, so 6% of 125 is 7 ringgit and 50 cents. Okay, so the purchaser will pay 132 ringgit and 50 cents. Okay, so the difference here, 7 ringgit and 50 cents and 6 ringgit, you get the difference of 1 ringgit and 50 cents. Okay, so this 1 ringgit and 50 cents is basically 6% of the added value. Okay, from 100 ringgit to 125 ringgit, the added value is 25 ringgit. So basically the additional GST paid is 1 ringgit and 50 cents based on 6% of the added value. Okay, that's why GST is also called value added tax. Tax is imposed only on the added value. Okay, so you see notes here, claim input tax credit. So basically, say for example, this is for wholesaler. They paid GST 6 ringgit. After that, they collected GST from the purchaser 7 ringgit and 50 cents. Okay, so because this 6 ringgit can be claimed back, this one they have to pay to the government. Basically, what they have to submit to the government is only 1 ringgit and 50 cents. Okay, set off between what they should be able to claim back and what they need to pay. Okay, they need to pay 7 ringgit and 50 cents, but they can claim back 6 ringgit, so just pay 1 ringgit and 50 cents to the government. Okay. Okay, so this is the mechanism of GST. Business pays input tax upon purchase of supply. So input tax refers to the 6 ringgit that they have to pay. This is called input tax. Tax that they have to purchase when they purchase their inventories and so on. Business collects output tax. So output tax is the tax imposed on the customer. Okay, so they pay input tax, but they have to collect output tax upon sale of supplies. So at the end of taxable period, registered person will compute difference between the input tax, the tax paid, and output tax, the tax collected, to determine whether to claim tax refund or there is tax payable that need to be paid. Okay. All right. So for sales tax, the one that we have now, okay, so for sales tax is imposed only at the manufacturer's level, okay? So throughout the supply chain here, only manufacturer will have to charge sales tax. So government collects tax at the manufacturer's level only. So manufacturer will impose tax to the wholesaler, okay? So the price, the tax will be embedded to the price, okay? And then wholesaler we'll sell to the retailer, of course, at profit, but whatever, I mean, the cost to the wholesaler is inclusive of the sales tax. Okay, so at the end, the price is embedded to the price paid by the consumer. Okay, elements of sales tax embedded in the price paid by the consumer, but as consumer, we don't know exactly how much is the sales tax that has been collected at the manufacturer's level. Okay, as compared to GST, basically, because at the end we will be able to see the tax, the GST is 6% of the selling price. Okay, but here, because it is embedded in the price, as a consumer, we don't know exactly how much is the sales tax amount. Okay, the one who knows is only the wholesaler, and after that, wholesaler will embed everything in this, in their selling price. Okay, so for service tax, okay, service tax not much different between GST time and now service tax, because for service tax, for those service provider, it's just between them and the consumer. Okay, so they impose tax rates. Tax rate is also the same, 6%. GST was also 6%. So government collect tax when service provided to businesses or service provided to consumer, doesn't matter. So as service provider, they will charge 6% service tax to their customer. Okay, so consumer knows he is paying service tax because this is just a direct between two parties, the service provider and the consumer. So in the invoice, it will be shown how much exactly is the service tax. Okay, but for sales tax, we don't know exactly how much. Okay, so I guess for businesses, for service providers, it doesn't make any much different, but for sales tax, only the manufacturer have to do all the procedures related to sales tax. Okay, so now the wholesaler and the retailer, they don't have to worry about filing tax return whatsoever. Okay, so less headache to them, to the wholesaler and retailer, but to the manufacturer, they still have to account for sales tax. Okay, it's just that now there is less headache in terms of because last time they have to they can claim something. Okay, so there are more works that need to be done. All right, any questions so far? No, okay, so we move on to sales tax. So as I said, there are two law with regard to sales tax, the sales tax and service tax. We have Sales Tax Act 2018 and Service Tax Act 2018. Because although there are two separate types of tax, but because certain things, not certain things lah, many things in there are similar. Okay, so I will combine the explanation about sales tax and service tax. But when there are differences, I will show this like two under two separate headings like this. Okay, some of them, quite many of them are exactly the similar, so I just combine between sales tax and service tax. Okay, so what is sales tax? Sales tax is a single stage tax. Okay, it's called single stage tax because it is imposed only on the manufacturer level. Okay, charged and levied on all taxable goods manufactured in or imported into Malaysia. Okay, so those manufactured in Malaysia, maybe taxed in Malaysia. Imported into Malaysia, that means manufactured somewhere else, but the importer has to account for the sales tax. Okay, because at the end of the day, because this is consumption tax, so it will be taxed if it is consumed in Malaysia. Okay, so anything manufactured in Malaysia and consumed in Malaysia will be taxed. If it's manufactured from outside Malaysia but imported into Malaysia to be consumed in Malaysia, it should also be taxed. Okay, and service tax is a form of indirect single stage tax imposed on specified services termed as taxable services. Okay, so we look at more in detail later on what does it mean by taxable goods and what does it mean by taxable services. Okay, scope of sales tax. Sales tax is charged and levied on all taxable goods manufactured in Malaysia by a registered manufacturer. Okay, those who want to impose sales tax must be registered first. Okay, and so used and or disposed by him. Okay, so it must be, because it must be consumed in Malaysia to be able to impose of sales tax. Or imported into Malaysia by any person. Okay, sales outside Malaysia are not subject to sales tax. So any export of goods, that one will not be subjected to sales tax because basically that is not consumed in Malaysia. Okay, sales tax is not applicable in there are two areas here, the designated areas and also special areas. Okay, for the purpose of sales tax and service tax, these two areas are considered as not in Malaysia. Okay, so designated areas are Labuan, Langkawi, and Tioman. Okay, I think you know this as Pulau Bebas Cukai, the free tax island. Okay. Special areas refers to free zones, licensed warehouse, licensed manufacturing warehouse, and joint development area. Okay, I'm not going to go into detail about these two areas. The rules is quite complicated. I just wanted to just introduce to you these two areas are considered as outside Malaysia for the purpose of sales tax and service tax. Okay. Okay, this is definition of manufacture. Okay, because it is imposed on manufacturers. So, manufacture as defined by Sales Tax Act 2018 in relation to goods other than petroleum, manufacture is defined as a conversion of organic or inorganic materials by manual or mechanical means into a new product by changing the size, shape, composition, nature, or quality of such materials, and includes the assembly of parts into piece of machinery or other products. However, manufacture does not include the installation of machinery or equipment for the purpose of construction. Okay, so definition of manufacture here is important because you want to know whether, because this is imposed only on manufacturer. Okay, so those who are outside the scope of manufacture here, we should not do not have to be registered for sales tax. In relation to petroleum, any process of separation, purification, conversion, refining, and blending. Okay. For service tax is charged and levied on any taxable services provided in Malaysia by a registered person in carrying on his business, or imported into Malaysia by any person who carries on business in Malaysia. Okay, so provided in Malaysia or imported into Malaysia. So these two are consumed in Malaysia. And provided by service providers outside Malaysia who provide digital services to Malaysian consumers. Okay, this is quite new. I think it started this year, last year, 2019. Okay, example, the third one example is, for example, Netflix. Okay, so service providers come from outside Malaysia, but because they provide digital service in Malaysia, so basically the service is consumed in Malaysia. That's why it is subjected to service tax. Okay, so export services are not subject to service tax because they are not consumed in Malaysia, and also not applicable in designated areas and special areas because these two areas are considered is outside Malaysia for the purpose of service tax. Okay. Okay, before I go further, I want to show you, I think I better show you this one first. Okay, so this is what we call my SST portal. Okay, so this portal is from the customs. Okay, anything related to SST. Previously, during GST time, they had my GST. Okay, now it's my SST. So everything about SST is here, and also for any information, any announcement. Okay, you can see there are a lot of announcement. All changes announced through here. Okay, so those sometimes for businesses and especially for tax agent, they need to keep themselves updated by going through this website almost every day, okay, just to get themselves updated, because when any changes we put in here and they don't get any notification, and the changes happen quite frequent. Okay, you can see 15th of May here, 15th of May, and then you have 21st of May, 29th of May. So a lot of things happening in here. So the tax agent have to keep themselves updated by visiting this website almost every day. Okay, so for companies, for registered taxpayers, okay, everything that they need to know are also in here, and all most of the submission is also done through this portal, okay, my SST portal. All right, so if you look here under legislation, okay, you can get the SST Act in here. Okay, you have all the Sales Tax, Service Tax Act in here. Even GST Act is also in here. All the DG decision, okay, the guides, okay, it's the general guides. This is the guide that I told you just now. I don't know why they removed the service tax from here. The sales tax that they have, this is the one that I put in the Google Drive just now. Okay, you can see sales tax is at 18 January 2019. The general guide is quite easy to understand. It's just that this one is not so updated. During GST time, they update very frequently, every few months. They don't put the service tax here. I found it somewhere, so I have put in your Google Drive. But as I showed you just now, it was not updated. Okay, and they also have what is it? Okay, industry guide for specific types of industry. Okay, automotive industry, manufacturing industry, and then you have advertising, and all the types of industries that are subjected to sales tax and services tax. And they also have specific guides here on very specific items. Okay, special here area you have here, any deduction facility, refund, and then under legislation apart from the act itself, there are a lot of sales tax regulations, service tax regulation here with all the amendments. Okay, you can see how frequent the amendments are happening. And also this is regulation. The other one is SST order. Okay, okay, there are also orders, sales tax, this order, that order, so many things. They are all in here. Okay, so I just want to introduce to you this website. So if you want to know more about sales tax, service tax, you can go to this website. There's a lot of things to be read. Of course, I cannot cover everything because we only have 3 hours today. So what I will cover is basically only the introduction phase, the general things related to SST lah. Okay, but the details you have to get the information from here. Okay, right. Okay, go back to the slide. Oops. Okay. All right, for the rates, for sales tax, there are 2 rates, 5%, 10%, and some specific rates. Okay, 5% for fruit juices, certain foodstuff, building materials, personal computers, telephone, and watches. 10% for all other goods except petroleum, subject to specific rates, and goods not specifically exempted. Okay, so petroleum, yes, is specific rate, so I don't put in here because it's too detailed. Okay, so for all other goods, it's either 5% or 10%. Okay, charge at manufacturer's level, so we don't know exactly how much is the sales tax that we have to pay when we purchase something. Service tax, 25 ringgit per year for provision of credit card or charge card services on the principal and supplementary card. So 25 ringgit for the principal card, another 25 ringgit for supplementary card, and 6% for other taxable service. Okay. Okay, definition of taxable goods, it's class or types of goods that are not exempted from sales tax. Okay, so basically all goods are subjected to sales tax except those who are listed as exempted. Okay, this is different from SST 1.0. The previous SST, the one before GST, only goods listed are subjected to sales tax. Whatever not in the list are not taxable. Okay, but now basically this one they adopt from GST. The concept of GST is like this: everything is taxable unless it is exempted. Okay, so if you want to look at the list of exempted goods, this is the link I'm going to show you here. Okay, so this is the sales tax persons exempted from payment of tax order 2018, which lists down all the exempted goods, but they are this is the original list, and they have after that issued a few more, but it's okay, we just look at the original one. You don't have to remember this, I just want to introduce to you. Okay, okay, you can see here, so the you have persons, you have goods exempted and condition, and also what's the other one? Certificate. Okay, so for different person, different goods exempted. Okay, like this one, all goods excluding petroleum and metal cars, local authority, all goods excluding motor cars and petroleum. Okay, so different person, different things that is exempted. Okay, mention armed forces, petroleum. You can see public higher education institution, all goods excluding motor car and petroleum. Okay. Okay, so you can see different person, different goods. Okay, don't worry, you don't have to remember this. I just want to show you. If let's say later on you want to refer to, you can refer to here. Yeah? Okay, come back to this one. Okay, so taxable services. Okay, for taxable services, only those listed are subjected to service tax. Okay, they have 8. How many groups? Until I. Okay, Group A, accommodation. Group B, food and beverage. Group C, that nightclubs, dance hall, cabarets, health and wellness center, massage parlor, public houses and beer houses. Group D, private clubs. Group E, golf club and golf driving range. Group F, betting and gaming. Group G, professionals. Group H, credit card and charge card. And Group I, others. Okay, the details, we will see the details later on. But I think the most complicated one is that Group G, professionals, is a bit complicated to understand. Okay, let's have a look at this service tax regulation. Okay, where is it? Okay, this is Group A. For accommodation, any person operating hotel, inns, lodging house, including homestay. Okay. Group B for food and beverage, restaurant, bar, snack bar, canteen, coffee house, catering service, and also food court. Then Group C, you have this nightclub, dance hall, cabaret. This is the beer house. Okay, and then health or wellness center, massage parlor. All right. And then for private club, okay, any private club, or golf club and golf diving range. And then betting and gaming, okay. Professionals, okay. For professionals, they have advocate and solicitor, lawyer, public accountant, surveyor, professional engineer, architect, consultancy service, what else? IT service, management service. Then you have employment service and private agency. Okay. There are a lot of details and a lot of gray area actually. I don't want to go there into detail because even the custom people themselves are sometimes confused whether the type of service is taxable or not. Group H, credit card and charge card, regulated by the negara, so these are basically the banks. And then you have other service provider like insurance, takaful, except for life insurance. Okay, and then you have telecommunication service, broadcasting, okay, paid TV like Astro, and then a custom agent, number 3. Number 4, parking space. Number 5 is about motor vehicle repair. And number 6 is courier service. 7 is hire and drive passenger motor vehicle. Number 8, advertising. Number 9, electricity. Number 10 is air service license. Okay, all right, that's all. Okay, so this is the general, I mean, all the details are here. Okay, you want to know, you have to read the details. And there are also a few changes after this. This is the original one. And then there were a few changes. Okay. Okay, next, threshold for registration. Okay, so not all providers of taxable services and taxable goods need to register. Okay, so those who need to register are those who reach the threshold. Okay, so threshold is calculated based on the value of taxable goods or taxable services for a 12 months period. Okay, so for sales tax, it is 500,000, the threshold. That means if your taxable uh, annual sales of taxable goods is 500,000, then you are liable to register. Okay, for service tax is also 500,000, except for those in food and beverage industry. The threshold is higher at 1.5 million. For credit card, charge card, and approved custom agents, there is no threshold, which means that they have to charge service tax regardless of how much is the value of taxable service. Okay. So determination of the threshold, there are two ways to determine that 500,000, whether you take previous 11 months plus current months, because it's 500,000 for 12 months period. So either current months plus 11 previous months, or current months plus, future, sorry, no, it's not 12, this is 11, or future 11 months. Okay, so 12 months in total. Okay. So businesses, they need to keep track. They have to make sure that when is the point that they will reach this threshold, because that will determine when they have to register. Okay, so previous month is easier to calculate. That means you have your records. You check that if that month you exceed 500,000, that month plus previous 11 months you exceed 500,000, then by law you have to register. Okay. For future months, okay, of course you cannot predict what will happen in the future, but for example, you manage to secure a contract, okay, and that based on that contract, within the next 11 months you are going to get more money, then in total you will get that 500,000, then you are liable to register, right? So once threshold is reached, must apply for registration not later than the last day of the following month. So once you reach that 500,000 or 1.5 million for food and beverage, you have to apply for registration not later than the last day of the following month. That means if you reach the threshold this month, June, for example, you must apply for registration not later than next month, the last day. That month is July, so 31st July is the last day that you have to apply for registration. Okay, voluntary registration is allowed. Okay, so this is for those who have not reached the threshold, but they voluntarily wants to register. Okay, so that is also allowed. Okay, why people want to register? Why give yourself headache to register when you don't reach the threshold? Okay, sometimes because see, when you are not registered, then people know that your annual sales is below 500,000. Okay, so some businesses, they want to register because they feel like it will improve their reputation. Okay, when they are registered, people know that, oh, this company is making sales more than 500,000. Okay, this is a big company. Okay, so there are businesses who voluntarily want to register because of that. Okay, but they also have to take into account that once you are registered, that means there are things that you have to follow. You have to file, you have to submit your tax return form. Okay, so registration comes with responsibility, right? So for those types of companies who have not reached the threshold, they have to really think of whether to register or not to register. Okay. So application for SST registration, the form used is what we call form SST01. Okay, so this is the form that you use to register. You can apply online through the MISST portal, okay, the website that I showed you just now. Okay, application can be done online. Submission of tax return also can be done online. Although manual is still allowed, but of course it's a bit slow. Okay, but and so most companies are using online application and online submission because the accounting software that they're using, most of them are what you call connected to the my SST portal. So it's easy for them to link from the accounting software that they have to what they have to fill in the my SST portal. Okay, so effective date of registration will be the first day of the month following the month the notification of liability is received. Okay, this is true for both service tax and sales tax. Yeah? So I put them together. The first day of the month following the month the notification of liability is received. Okay, so notification of liability is the one that you have to register not later than last day of the following month. So that say you reach your threshold now is June, so you have to submit by July. So you have to submit by 31st July. So effective date of registration is the first day of the month following the month the notification is received. So first day of the month, the following month is August. So first day of the month is 1st of August. Okay, so you submit your registration by 31st July. So 1st of August is the effective date of registration. That means you are already a registered business. So, or any earlier date agreed by the DG but not earlier than the date he becomes liable to be registered. Okay, so the Director General can give an earlier date. Okay, I've seen it in the case when the business should have been registered long time back but they did not register. Okay, so you don't have to follow that. So in case of artificial separation of business to avoid registration, DG has the discretion to treat the separate businesses as one taxable person. Okay, though there are businesses who artificially separate their business to avoid registration, that means to avoid reaching the 500,000 threshold, they open different, they register the business under different names. Okay. One is business A, one is business B, one is business C, but maybe the activities are very similar, they're operating at the same place. So if the DG has suspicion on that and further investigate, and then they decide that this is just an artificial separation. Okay, it's actually the same business but registered under different name just because they want to avoid reaching that 500,000 threshold because they don't want to be registered. So the Director General has the discretion to treat the separate businesses as one taxable person. Okay, so they will still be taxed as one business, and the revenue will be added on to reach that 500,000 threshold. Okay, next is taxable period. Okay, so taxable period is decided upon registration. The first taxable period will be determined according to the financial year end of the business, whether the business has an odd financial year end or even financial year end. Odd means January, March, May, July, okay, September, November. November. Okay, so those are odd months. So for businesses with accounting year end on odd months, the first taxable period is 1 month. Okay, for example, first taxable period is September. The second taxable period and onwards is 2 months. Okay, the normal taxable period is 2 months. Okay, just that for the first taxable period, it's either 1 month or 2 months. Depending on whether it's the financial year ends on odd month or even month. Okay, so just the first is different. Afterwards, all the taxable periods consist of 2 months. Okay, so if let's say the company's accounting year end is in December, okay, December is even month. Okay, so the first taxable period will be, it consists of 2 months. Okay, example here, first taxable period, because sales tax and service tax comes into operation in 1st September 2018. Okay, so these are for companies that have been registered since the beginning. Okay, so for companies with even financial year end month, they will have September to October, and then November, December, and then January, February, and then February, March, April. Okay, 2 months period. So this taxable period, that means every 2 months they will have to submit tax return form. Okay, so the period is only 2 months. So after 2 months, they submit one form. Then another 2 months, they will submit another form. Okay. For if your accounting year ends in odd months, okay, the first taxable period at that time in September, there's only 1 month. Okay, after 1 month, they have to submit the tax return form, and afterwards, it's back to the 2 months period, October, November, and then December, January, and then February, March. Okay. So application can be made to vary the taxable period. Let's say you can apply if you don't want 2 months, you want 4 months, or you want 1 month. That one you have to submit application to the Director General. They can allow that with if you have reasonable basis. All right. Okay, so submission of return. The tax return form we call it form SST02. Okay, SST01 just now is for registration. So SST02 is for the tax return form. The same form is used for sales tax and service tax. SST02 must be submitted in the following month upon the expiration of taxable period. Okay, so let's say the taxable period is this one, 1st September to 30th September. So it says here, following month upon the expiration of taxable period. So taxable period expires in September. That means it has to be submitted the next month in October. Okay. Submission must be made even though there is no tax due. Okay. Let's say you did not collect any sales tax or service tax during that month. Okay. For example, during the MCO, the lockdown, there is no business at all, so you did not manage to collect any sales tax or service tax, but you still have to submit the tax return form. Yeah. All right. Look at one example here. Let's say you reach threshold on 18th of January 2020. The financial year ends 31st December. Okay. So I want you to. We are going to take a break. I think let's take a half an hour break. But during the break time, try to fill this in. If reach threshold of 500,000 on the 18th of January 2020, what would be the last date to apply for registration? What would be the effective date of registration? What is the taxable period? And the last date to submit SST02. Okay? So you have this in your Google Drive. So you can have a look. We will take a half an hour break and come back at around 3:30. Try to do this, yeah? All right, I'm going to stop recording. Do I need to share this, or you can refer to the slides in the Google Drive? Or you can take picture now. You want
Google
me to
Drive?
Okay, so I can turn off the. Shall I turn off the Zoom?
Yes.
Okay. Right, I turn off the Zoom, and then you can come back at 3:30, yeah?
All right, doctor.
Okay.
Okay, see you soon.
See you soon. Take a break.